Good afternoon, everybody. Good afternoon. Welcome to Paul's Monday Market Update 161 for Monday, the 4th of November, 2024. Hope you're all well. Hope you've enjoyed a good weekend and ready for what will undoubtedly be an eventful week. Before we kick off, just for those of you joining us for the live session, if you can just confirm that you can hear my voice and you can see the slides, that would be fabulous, just to make sure that the technology is working in our favor rather than against us. If you're joining us for the first time, Paul's Money Market Update is literally that, okay? It is me flying through as much as I can cover in the next 30 minutes, looking at strength and weakness within the FX markets, looking at some charts of interest that you might want to add to your watch list, and then a look at the live market. It is not a signal service, it's not trade recommendations, it's purely what I'm looking at, which might help you with your own analysis as well. As always, you're very welcome here. Just remember that you are responsible for your own trading decisions. For those of you who love to listen to a bit of a trading podcast, if you've not joined us beforehand, you can join us now on the TOGS Trading Podcast, myself and my good mate Ian. We're into season 2 of TOGS Trading Podcast. Okay, we also have our own website, togspod.com there, and you will find that we try and put out a podcast every Thursday. And if you go to the website, you'll be able to access Ian's blog and also a recording of today's Monday Market Update. As I said, you can find it there, togspod.com, or just use the QR code there, okay, to take you that and sign up for that. And if you are interested in learning a little bit more, okay, this afternoon we have the Active Trades Monday Market Matters webinar, which is going to be an interesting one for this afternoon, okay, because actually I'm going to be talking a little bit about trading performance and about a framework that has helped me a great deal as well, which is basically how to improve your trading using the OODA Leap. I appreciate some people may have heard of it, some people may be more aware of it, some people may never have heard of it at all. Well, anyway, here's your chance to do that. You can either register on the Active Trades website or once again, scan the QR code and join us 2:00 London time for a little bit of an insight into how you can use the OODA Loop to help you with your own trading decisions. Okay, so let's dig into our session there now. Okay, if you're new to trading or new to joining us, this really is the start of my own model. Okay, this is the work I do at the weekend. It's just a little bit of an insight into some parts of it, where I'm effectively looking to identify strength and weakness, primarily within the FX markets, and then into indices and commodities as well. Because by doing so, I find that it just allows me to allocate my time, energy, and resources far more efficiently for the week ahead. So where are we and what is this actually telling us that we can use? So here we are. We are into week 45 of the year, okay, for the November. And it's going to be quite a week. As you well know, of course, we've got the US election, tomorrow, okay, which we will cover a little bit more at the moment in the charts of interest. But we've also got a fair bit of data coming out as well. Okay, we've got Wednesday's quiet, but Thursday we've got UK data. Okay, and people are expecting an interest rate cut there. So also the US, okay, the US FOMC statement, and people are intrigued to see if there will also be a 0.25% interest rate cut there as well. They will have an impact. Now, of course, in the UK, with regards to, as we spoke about last week, of course, we have let's call it the aftermath of Rachel Reeves' budget last week. I'm yet to find anyone who's got anything good to say about it. You may differ. You may find lots of people who are loving it. I have yet to find anybody who does. And of course, that has an impact on such things as confidence in both sterling and also in the FTSE. But then invariably also, we will also, as I said, people are expecting an interest rate cut later this week. That, though, hasn't really stopped sterling from remaining top of the pile at the moment. Okay, top of the stand there. You can see it number 1 of 8. As you've heard me say for ages, a lot of that I think is due to the weakness in others rather than inherent strength in sterling. But those of you on stage 2, we go through the sort of COT report data on the weekly call tomorrow on a Tuesday. Joining that and holding up so far is US dollar, and as we've said, really over the last couple of months, okay, that has climbed from being bottom of the pile to getting into the top of the pile. Although as we can see here, okay, dollar, pretty much everybody was stronger against the dollar today. That's not a really shock, okay. Everything's just going into sort of, everyone will be going hands off as we run into the election. And there's data coming out of the weekend, okay, which is basically trying to imply that, it's Harris's to lose now, but we'll look at that a little bit more when we look at the charts of interest. But dollar has been strong. Will it remain strong after the election and after the FOMC statement? Okay, based upon what they decide to do. Well, we shall find out next week. But at the moment, it's still strong. And at the bottom of the pile still remains Japanese yen, despite its moves today. And also Kiwi yen, okay? But then it's also joined there by the other dols, okay, in terms of Canadian dollar and Aussie dollar. What we are starting to see is, euro is starting to creep its way up there from being at the bottom of the pile there, okay, just over a month ago. It's now nudging its way into third place. This I find fascinating, okay? This I find fascinating based upon the fact that, the kind of political chat and rumors are rife that the German government could collapse later this week. They're just not getting on at all right? The coalition there, and you can read into that. There's plenty of details you can read into that. Plenty of people who can explain it better than me. But you would think that would have an impact on the confidence and sentiment within the euro, but that has not been the case. Perhaps it's been the offer. Perhaps maybe the collapse is what markets want. Okay, because they think they'll get someone better who will basically address the problems in Europe. Good luck with that. And Swiss franc is just bobbing along, all right, as particularly normal. So. What I am interested in is that when I look at the particular currencies, euro, okay, pound dollar, okay, and euros that are selling, all right, they are still into the selling world, okay, and that is interesting to me. And we'll look at euro sterling in particular when we go onto the charts, and that will help us explain a little bit of that euro bump that we've seen. What we're starting to see also is a bit of red creeping into the indices, okay, in particular, and a little bit of the commodity, but indices in particular, okay, and a couple of them, like the Russell and FTSE, they have gone stand to S, okay, tactical shorts. But as I said, there's a bit of red there on the momentum. Now, part of that, of course, will be a case of people positioning themselves in front of the election and in front of the FOMC statement. So, once again, this could look very different by the end of this week. That shouldn't really come as too much of a shock or surprise. As I said, it is a very eventful week that we are throwing ourselves into. And as you always hear me saying this, if you're very, very new to trading, weeks like this, there's absolutely nothing wrong with sitting on the sidelines and just watching how markets react to the news, okay? Because it can be rather eventful and it can be rather volatile, okay? And as always, everybody loves volatility, but it's a double-edged sword, okay? When you're on the right side of it, it's great. When you're on the wrong side of it, you're in trouble. So as I said, it's going to be a volatile week, it's going to be an eventful week. There will be opportunity, but there will also be threats, and so you manage risk accordingly based upon your own principles. So. Anyway, there we go with in terms of looking at the overall FX pairs and indices. Now let's have a little look at some charts of interest. So once again, if you're joining us, charts of interest is I'm just looking at a couple of charts that are of interest to myself and maybe to yourself. I don't consider myself an equity specialist per se, but listen, we can look at a chart, we can analyze a chart, and we can see what's going on and take from it. Now. This is DGT. This is Trump Media and Technology, okay, and it's the daily chart. And we looked at this about a month ago when we looked about how the Trump trade was gathering steam, because what we talked about was really, as you can see, the having sort of peaked in prices, okay, earlier on in the summer. Well, what we had seen is basically price had basically been in a downward trend. Once Biden stepped out of the way, once Harris stepped up, once the party machine got going, and certainly in terms of their advertising spend, we can see that was having an impact, okay, as Trump's percentage likelihood of winning was fading in terms of the, let's say, the mainstream media perception. But we talked about how we had bottomed out at 1250, and actually, we were rallying, and we talked about how there had been a bit of a rally across instruments that allied with the Trump trade. And what we saw was that has continued, okay. But what we saw at the end of last week was, you can see there, okay, from tickling on the belly of $55, we're back down towards this kind of $30 pivot area now. There's a lot to go on with that. Is it people sort of selling the Trump selling DGT just in an effort to manipulate price, to basically to manipulate voter perception? Is it a true reflection of what the story is? We saw some particular reports, okay, coming out this week, giving a very pro-Harris slant on it. Once again, you always have to sort of say in these last couple of days, is that propaganda or is that true insight? We saw proxy markets shift towards a Harris win, which is fair enough, and I watch them and follow them and have traded them very well over the years. We also have to realize that it doesn't actually take as much as you think to shift those particular prediction markets. So, what might be effectively a small drop in the ocean of advertising spend might have a huge impact in terms of changing people's perception. And it's what Mr. Soros did for Mr. Kerry back in the 2004 election, etc. So there's a long history of that. Either way, okay, everything is narrow. It's all becoming a bit too close to call, and we're going to have to wait and see over the next 48 hours to see what happens. Okay, I suspect either way, it's going to be a rather eventful week. All right, it might even be eventful months. Okay, so but if you're just looking at how the market's reflecting it, well, you can see that particular drop there on DGT there over the last week or so. Talking of significant drops, super micro. Okay, this is a real grand old Duke of York, isn't it? Okay, a March price up to the top of the hill and in March it back down again, and you can see for yourself what's happened here. From being a few years ago, all right, in a $5 to $10 sort of range, we basically effectively have effectively flown up there, absolutely flown up there. Once again, up above $120, and then the trouble sets in. Okay, and you can see what's been going on since then. And what we saw last week was, I think it was a 45% drop. 45% drop when their supposed new accountants basically sort of resigned themselves from the auditing role at Supermicro, and as you can see, that has had that impact there in terms of the price dropping from just under $50, and where's that pre-market's about 26.45. All right, that's that is a big drop, isn't it? As I said, just over 45% drop. And it's I'm always intrigued by these particular stocks because, as you can see, the price action there is quite volatile, right? And but also, having been someone who first started engaging in markets during the dot-com boom of the sort of 99, 2000, etc. You have particular sort of insight or experience or remembrance from seeing, let's see, tech darlings. They show up and then they blow up, and you always sort of whenever I see things like this, I start to think of some of those companies that did that during the dot-com boom, and also how you have to think, is this like the canary in the coal mine? Is this the sort of is this what happens when you start to scratch the surface? Everything becomes a little bit ugly and everything starts unraveling very, very quickly underneath. Either way, right, that is going to, there's when your auditors resign and refuse to basically sign off on your, on your numbers, well, then you're not in trouble. And in fact, what's happening is the vultures are undoubtedly kind of circling and stuff. And so, there will be people in here thinking, oh, this is a value buy. I wouldn't be touching it with a barge pole, all right, other than to maybe to trade any pullback on that. But it makes for a fascinating chart, doesn't it? And I suspect we'll see more to the downside later on this particular week. And talking of more downside, this is Intel Corporation weekly chart here we're looking at, and once again you can see it's been a pretty sorry state for it, and is kind of back into the news for a couple of reasons. Even though their data has been pretty good, you can see for yourself, okay, even over the last few years, okay, we've gone from just under $70 down to sort of $18. And what we're seeing this week, I think it's this week it's happening, that basically Intel will be replaced by Nvidia in the Dow 30, okay, and that's that is a real reflection of the of those two companies. Okay, Nvidia, despite its recent flush, is basically can do no wrong. Okay, and continues to power ahead. Intel really has been struggling from once being that kind of the darling of the tech scene. Okay, in terms of what investors liked. You can see for yourself that traffic has only just been going around one place. And what I'm intrigued in here is that we've got this $25. Okay, $25 is clearly a pivot level, having acted as what was a support for creating that triple bottom for it ran up to the 200. But then we've sliced right through it there, and then actually as we've come back, it has flipped. All right, it's flipped from being support to resistance here, and now we're just kind of just pivoting, sat around about $23 there. Right, so it'll be interesting to see if the selling is already done or whether it is officially removed, whether that continues basically with companies dumping it because they are just by their very rules they have to dump companies outside of the Dow 30 and shift that into Nvidia. So that might be one to watch this week to see how that particularly plays out. Okay, so I think I only put three stocks in today. As I said, they're always like just charts of interest, just to have a quick look at because there's lots to look at on the live markets and there's lots been going on over the last week. So if you just bear with me a second, what we'll do is we'll switch across to the live chart. So just bear with me one moment and we'll do that. Da, da, da. Okay, so here we are. We're actually on my charts on the dollar. So we're going to start with a bit of a dollar holler because of where we are. So this is just a profile of all of my dollar pairs. Okay, so I've got dollar index here, which we'll look at. I've got Aussie dollar, Euro dollar, pound dollar, dollar Swiss, Kiwi dollar, dollar Canadian, and dollar yen there. Okay, strip there. Okay, all of dollar. I just want to be able to look and get a snapshot on what the score is with the dollar. We look at the dollar index weekly chart here. You can see, the last few weeks has been all about the dollar strength. All right, that has been a real dollar holler, hasn't it? Last week, some people call that a gravestone. Well, no, I wouldn't. More like a dragonfly doji, really. But there was support there, but no surprise that there's no real carry through based upon the week that we're going into. Okay, so what it would not surprise me if we came back and sort of drifted our way back down to this weekly 50 just for a few pips there. Okay, it's no surprise that we'd see that. If we go down to the 4-hour chart, what I'm interested in is we gap down on dollar. All right. After the shenanigans of Friday afternoon's NFP, okay, that number was, what was it, 12,000, okay, rather than what was it, about 100 or between 111, 140 forecast. A lot of that was basically due to the sort of the Boeing strikes, but also the floods in Florida. It was almost like a nothing NFP. It was almost as if it was a nothing, almost as if basically just written off in the hope that it didn't sort of reflect too badly on the incumbents' economic message. But we can see here that basically that gap down there. Is that gap down? Markets just following that weekend news, okay, about Harris looking to win, because that would, in fact, be probably weak for the dollar. The Trump trade, part of the Trump trade was strengthening the dollar. We've certainly seen U.S. Treasuries, okay, their prices have risen. Yields have kind of subbed a little bit there today, this morning, before as we crack on into the start of the week, but. As we can see, that basically the dollar has gapped down there, and but I'm not expecting any real clarity on that for the next 48 hours or so. However, we can have a look at what's going on elsewhere. So if I look at like dollar against Swiss franc, dollar against Swiss franc did the same, didn't it, really, last week? Okay, very, very similar to the dollar index. And today, what have we seen? If I look at it, it's been quite some dump on the 4-hour chart. Gapped down and continued down. All right, there's the 30-minute chart. Okay, gapped down. Okay, through the Asian session and has just continued down. That is, a bit of Swiss strength, dollar weakness. If I look at euro against dollar, okay, euro against dollar, having got our way beneath on the weekly chart, beneath the 50-period moving average and showing euro weakness, what we've seen here, okay, over this last week here, you see in the dollar chart is, the daily chart, we've kind of based out there a little bit, all right, based out a little bit, and we're actually starting to wedge our way up a bit, nudge our way up a bit. Now, is this just basically a relief rally from people sort of closing their dollar longs before the election? That is a distinct possibility, but you have to trade what you see. Some people will be looking at that as the start of maybe a cup and handle formation. Others would be seeing it as an inverse head and shoulders. Some might even be seen as a double bottom, etc. However you wish to, fill your boots. But I'd be saying if it keeps holding above the daily 200 period moving average this week, that's a reflection of a weaker dollar. And if we look at it against Japanese yen, all right, you can see that dollar yen weekly chart, we've rallied our way up strongly, but then once again last week, all right. Some people might call that a bearish pin bar. Some people might call it a spinning top. All right, I'd probably be more sort of likely to call it one of the latter, just because you've got wick to both sides of the both sides of the body. If I go down to the daily chart, yeah, to me that looks like a little bit of a topping formation. Okay, even if it's a topping formation that just goes sideways for a couple of days until we get that clarity, that should not surprise people. Okay, that's what we're particularly looking at. And we can see elements of that across. If I just push, even here we go, dollar CAD on the weekly chart. Okay, as it's basically. So a bit of a rejection candle there, certainly on Aussie against dollar. Okay, I'd be calling that like a kind of a bullish pin bar. Even if we look at that on the Kiwi dollar there, so you can see across the board those dollar pairs. They pretty much on the weekly chart they've either gone into a weakening of dollar or indecision, and that shouldn't really be a surprise as we start to run into this particular week ahead of us. Let's have a quick look at some indices and some commodities, and then we'll go back to the FX pairs, just looking at what's popping up for us and how we can define this and see what the story is. Let me just bring this up here. Bang, get these charts on the right. Okay, all right. So this is just an indices profile here. So Dow, Nasdaq, S&P 500, Russell, FTSE, Nikkei, DAX and oil. Okay, oil has been a strange one. Okay, you can see here. Let's quickly miles here before we get into the indices. Oil, I would look at that as really we are penned in by the 50, the weekly 50 around about 75. And 68, okay, is the level of support, and I think we're just getting a bit penned in there. Okay, and that shouldn't be a massive shock either, should it? Really, if we look at that in terms of in terms of the fact that we're running into an election, okay, and the difference in their opinions, okay, between oil and renewable energies, etc. No surprise to see that price is just pinning there. It's just squeezing itself up before we get a move out. All right, so this might be one to watch to see how markets react, okay, and whether it can be used as an early indicator of a likely victory. If we look at the indices, though, this is Dow. The Dow, the weekly chart's been great, but the last couple of weeks, whether that is just people taking profits, all right, before the election. Nasdaq, okay, just look at how we printed there, okay. I would look at that as it is an engulfing candle. It's not a key reversal because it didn't close beneath the low, but it is a bearish engulfing candle. S&P 500, okay, that followed through last week, okay, bearish follow through. And then if we look at the Russell as well, okay, that's that bearish follow through. Now, does that mean that we're expecting a crash? Not necessarily. I think it's just people taking profits and going a little bit flat before the election. That would be a kind of a smart move to make if you can. Not everybody can. If you're a big major central bank, or if you're a big investment bank with huge positions, but I will be watching that over the next 48 hours to see if that gives us an indication of the likely direction. A little bit closer to home, I talked a little bit about the euro and invariably how the impact that might have. If you look at the DAX on the weekly chart, we are still not far, from recent highs. Last 2 weeks has been negative, and as I said, I'm surprised it's not even more negative based upon the kind of political uncertainty and intrigue that seems to be going on in Germany at the moment. So I think it was the CFO over the weekend at Lender. He put out a report about some of the things that needed to happen to change. I don't consider myself an economic expert on Germany, but it did seem to like they was kind of like tinkering with playing with the deck chairs on the Titanic. But as I said, I don't consider myself an expert on that. I'm just a trader. I just want to trade what I see in front of me. But the fact that they're in such trouble and yet we are still at the DAX, near all-time highs, is I find that fascinating. All right, I find that absolutely fascinating myself, and probably a sign of how lots of indexes just track the American indices these days. Close to home even more, FTSE. Okay, so this is the FTSE weekly chart. Had talked about how really it's done nothing and wasn't really going to do anything until the budget last week. You can see how the initial, there was, not surprisingly, there's a bit of volatility there, okay, and we flooded our way down. We've had a little bit of a bounce today, but I wonder whether that is just, that's just money flowing elsewhere. My view is, in my simplistic view of the world, and I'm the first to admit that, namely that I think a Trump win would be good for the world, but bad for the UK, because I think a Trump win would basically just suck in all the liquidity dollars, okay, and capital from around the world. A Harris win, seen as she is anti-business compared to Trump, could have been good for the UK had Miss Reeves not come out with such a draconian budget last week, all right, which I think will put a lot of people off investing in the UK, certainly for the next couple of years. What we will see is, I think, maybe we'll see an element of FTSE sort of start to move up, but actually move up not because of anything great they've done, but more that if sterling weakens, well, then invariably that sort of reflects well on the FTSE 100. What you'd need to probably want to have a look at is the FTSE 250 and the FTSE 350 to give you a little bit more of an indication in terms of how small to medium UK businesses are looking to take that in terms of the budget. But certainly, as you can see there on that daily chart, really for most of those last 2 months, we've just banged around. We dropped, okay, we've had a little bounce off the 200, but I'm going to be intrigued to see that, do we come up here, form another lower high, okay, before we drift our way down there. Okay, that's what I'll be looking for as part of my scenario for going forward. Let's have a quick look at gold and silver. All right, everybody loves about gold and silver. So the interesting thing is, remember we just talked about dollar, how it dollar weekly charts. Okay, lots of indecision. Gold has been in a great uptrend, but last week, that is a reversal pinball there. Now that doesn't necessarily just mean that that's the gold run over, far from it, but probably more an indication of people just taking profit and sitting on the sidelines until we get some clarity there. Okay, from the action. And as you can see, last week 4-hour chart, okay, ran up there. We had rolled over Thursday, Friday, and really we're doing nothing this particular week. Silver, I look at that on the weekly chart now as having pushed its way through. I look at that as a little bit of an evening star. I normally prefer an evening star to have a bit of a lower close, but just looking at the way that is, and clearly those first highs of the year acting as a little bit of a pivot level. What's that, about $32? So I'll be watching to see how it's playing its way around there. Intriguingly, Bitcoin as well. So we talked about we've kind of broken out of this sort of widening megaphone, you might call it. But what we could see is, and I said this last week, is I'm intrigued. I said this last week, how does price react at 70? We've only had one weekly close above 70. Every other time, okay, it's got up there, it has actually closed beneath it. And that's what it did last week. Came up to it and it's closed behind it. Now, once again, I think there will be an element there also of the reactions to the trade. Okay, Trump wins. He said he's pro crypto. I see that sort of rallying up. Harris, not so much. Okay. And then basically, I'd say that would not necessarily be great for crypto, but we remain and see. But hopefully you can just get the idea that across, crypto, across commodities, across FX, everybody's just basically sort of taking a bit of profit, sitting on their hands and waiting to see what the score is. Let's finish with sterling today. Let's just put these on the weekly charts. Always finish with a bit of sterling. All right. So, as I said, we had the budget last week, and we've got the FOMC, the MPC on Thursday. We also have the FOMC later on in the day as well. But how's that impacting things like cable? Cable last week, look at that. That is a bit of an indecision candle, isn't it? I'd call that a high wave candle, okay? It's pushed out there, okay, but not really, not really giving any clarity yet. There was a bit of a bearish close in it, and it closed beneath 130. That's not a massive shock. If I look at the price action there, having been a nice downtrend, it's no surprise that it's getting a little bit volatile, a little bit wild after, budget, elections, MPC, FOMC. I don't consider that I don't see that ending till the end of the week. Okay, so as an intraday trader, you might get a few little scalps here, but there's there's nothing I see there that's getting me excited. I just think we're going to pivot around 130. That's what I think will happen. We'll just pivot around 130 until we get some clarity. That's what we can expect with cable. Pound against yen, even that. If you look at that, we've had a great run the last few weeks. Okay, sterling strength, yen weakness, but even that last week, another high wave candle after the budget. People are like sort of scratching their heads, working out, where do we go from here? What are we actually gonna do? I talked about pound Swiss and about how how I thought it was coiling up, and I wondered whether we would get it, either sterling strength or Swiss franc strength to give us an indication. And and it looked like we started out there. If we go down to the daily chart, we broke out and then came all the way back up, and now we're back into it. So I wonder whether we're waiting for MPC, okay, or whether we're actually just waiting for the US election, because invariably Swiss franc is seen as a risk-off currency, and sterling would be one of the risk-on currencies. Maybe that's just a reflection of that coiling up before we get any real clarity there. The ComDoles are the ComDoles. Let's just finish, as I said, with euro against sterling. So the reason being that even though euro has been weak, even though Germany looks like a basket case, even though there's been terrible, sad things going on in Spain, which will undoubtedly have a huge impact as well. What we saw last week, okay, after pretty much a trend all year, all right, of lower bearish on euro sterling, we kind of bounced off this 83 level here. Last week's candles were, it's a bullish engulfing candle, all right. I would prefer the candle to close higher up, but what you want and what you get is not the thing. Nevertheless, there is still a strong body on it. It's still closed higher than the previous candle. Okay, that was a price action combination there that's flowing its way out. If I look at the daily chart, okay, as I said, 83 has acted as support. We've bounced up off it. We'll come back down to the 50, and now you're looking at, is the 50 now going to flip and go from being resistance to support? That's what we'll be watching. That would be an indication, as you can see, the 4-hour chart for the start of this week. Okay, that basically we're going to get sterling weakness and euro strength. So that's something you might just want to watch this week as we go through the data and go through the many events of the week. All right, ladies and gentlemen, let's draw it to a close there. As always, I appreciate it's, I race through things, okay? The whole idea being I'm trying to just share with you as much as I possibly can in 30 minutes. I hope that has given you a little bit of help. I hope that's given you a little bit of insight. As I said, it is an eventful week. Very, very eventful week, very full on. Make sure you're managing risk. Make sure you're on top of the news flow and the order flow. Didn't even really talk about quite a lot of the companies with their earnings reports. Didn't have time for that. There'll be lots of that going on as well. So there's plenty for you to watch, and take on board. Have yourself a fabulous trading week. As I said, I'll be talking about the OODA loop at 2:00 for active trades. If you want to join us, those in the VTP will be back doing the stage 1 calls tonight and the stage 2 calls tomorrow. And for the rest of you, have a fabulous trading week, and I'll speak to you soon. Thanks very much, everybody. Cheers.